Good morning, ladies and gentlemen. I'd like to take this opportunity to welcome you to today's session. Today we have an interesting topic ahead of us and a wonderful panel to take us through this session. I'm very excited to lead the conversation today on a matter that touches us on all areas of our lives, right from our tables to our livelihoods, and even to the economy. And our topic of the day is we're trying to understand how we can access finance for youth and agri SMEs across the agricultural value chain. So this is what we'll be addressing today. So I just want to assure you that we're in the right place. We have our panelists also just joining us for this conversation. The session today is part of a wider program that Invest in Africa has been running under the Invest in Africa Masterclass Series. And maybe before I get into that, I'll just request to introduce you to Invest in Africa and to let you know what we do for those who are joining us for the first time. So Invest in Africa is a private sector initiative that seeks to drive economic development throughout African economies. And we have a vision of prospering Africa's in the countries where we're working, including Kenya, and particularly this by enabling trade between SMEs and large corporations, but also enabling B2B linkages through that. Our main reason why we do this is to be able to drive job creation. And you know very well that in one of the areas we're addressing today, agriculture, not only creates jobs, but also has huge potential in addressing some of the deficits that we have in terms of job creation. So this is very, very much aligned to what we aspire as an organization. And under the IIA Masterclass Series, we have a number of programs which we will be interesting you today. One of the things that we do under the IIA Masterclass Series program is running a program where we are supporting SMEs in terms of their recovery and resilience, especially in view of the shocks that have come due to pandemic, and trying to give them a lifeline and prepare them even for future for the growth of their business. So we have the Masterclasses series, and just like the one we're having currently. Within that also we have embedded coaching, and we're working with reputable coaching organizations that are part of our ecosystem, as well as access to finance. And that's why this session we're having today. And today we're taking a more sectorial and approach to the conversation. Then we have the Knowledge Academy, which is a huge resource that we are availing to the SMEs, well supported with a toolkit that is able to get resources and knowledge that you can use to grow your business and also enhance your capacity as a business leader. So I also say that we're very, very keen to ensure that there is a B2B kind of linkage in what we do. So the session today basically seeks to address certain issues, and we organize these issues around some of the questions that we would like this session to address. We will still be telling you more on how you can connect to those opportunities within the recovery and the resilience program. So we'll still put up that slide toward the end and just show you how you can connect and how you can contact us. So one of the things we aim to raise today is to look at what are some of the financing opportunities that are available along the agricultural asked receiving a lot of questions around this, and then also look at what are some of the platforms SMEs and youth can be able to tap in or leverage and to maximize these opportunities that are available in the access to finance. The third thing in this conversation today, we have a voice from the public sector, also private sector, of people who are dealing with the financing and seeing what are the opportunities that are available for youth and the agri SMEs along accessing the finance, and then how can we position ourselves as agri SMEs to ensure our entities, our ventures are able to access this finance. Then what is the missing link? Why are the financiers saying money is available? Why are the agri SME says that there is no money? And we would like maybe to hear some of those things in the conversation today. So before I bring in, I introduce the panel that we had today, I just wanted to just give the context in terms of why are we having this conversation today. So that's just to get some basis of some work that has gone into this. Recently, when the pandemic happened, the government instituted some initiatives to support the agri SMEs, just to help them overcome the shocks that came because of the pandemic. And one of the things that the government did in terms of just enabling these entities to access financing, the government allocated an increase towards 21%. That's around 50.1 billion into the 2019-2020 financial year. But besides that, the government has also been able to put in subsidies for farm inputs to reach 200,000 small-scale farmers through the e-voucher system, and allocated an excess of 3 billion Kenyan shillings. So one of the questions we'll be trying to answer and try to connect to is, where is this money and how is this working? Also, the government put in an advance of about Kenya shillings 500 million in form of agricultural loans going through the Agricultural Finance Corporation, which was basically targeting small scale farmers. So this is just to give context, and the government further allocated 3.4 billion for an expanded community household irrigation scheme, just to cushion the farmers from the adverse effects of weather, but also to secure the supply chains that have been affected. So there's been some efforts that have worked throughout the government, but also there is been immense challenges in terms of having a multi stakeholder effort towards addressing the challenges in financing agriculture, and importantly to boost production. So this is something that is within us, and it's why we're addressing this topic today. And generally, there's also been a low uptake of this financing opportunities by the youth. And the question also we're asking ourselves is that, are the current financing models applicable or favoring those who are involved in agricultural production? So that's why this topic today is very, very important for us. And we are undertaking this conversation along those lines. So I just want to take this opportunity to give an introduction of our panelists who are will be just helping us and understand some of these issues.
Hello, ladies and gentlemen. My apologies from my colleague Dennis. There's a technical itch. As we wait for him to join, I'm going to pick up with the conversation. My name is Marcy Lembua, and I'm going to pick up from the introduction of the panelists. As introduction to our panelists, we have Esther Murure, who is also the associate director of Equity Bank in the agribusiness docket. Esther served as a director in the board of Equity Insurance Agency, a subsidiary of Equity Group. She has a degree in business administration and master's degree in strategic management from the University of Nairobi. Before joining Equity Bank, Esther worked with the government in various positions, managing agriculture projects, working with farmers and other stakeholders in the wider sector in Kenya. In terms of experience, Esther has established the agribusiness department and introduced financing of agriculture value chain in terms of strategic partnership with players in the agriculture sector. And she has also served as a member of most agriculture stakeholders forums in Kenya, with the objective of making smallholders farmers commercially sustainable and internationally competitive. Our second panel is Judith Libaisi, who is an agricultural value chain expert. Ms. Libaisi is a rural development specialist, majoring in the field of agriculture and rural development, specializing in agribusiness and value chain development, smallholder farmers entrepreneurship, sustainable agriculture, food security, and secure livelihood. She has an experience in agriculture value chain management, business development services, capacity building, smallholder farmers market-led approaches, such as making market work for the poor approaches. Judith is a trained trainer and highly experienced in ALDOS training, experience learning, individual coaching, and mentoring with excellent communication skills. Ms. Libaisi is a PhD student at University of Nairobi. She holds a Master's in Development with major in rural development and HIV, Master's in Agribusiness Management and Sustainable Development, and a degree in Agriculture Education and Extension. Our third panelist of the day is Mr. Lone Felix, who is a Partnership and Resource Mobilization at Agriculture Finance Corporation. Felix works at AFC, and AFC is a development finance institution of Kenya which focuses on financing agribusiness and agribusiness value chain in Kenya. Felix is the Enable Youth Kenya program manager and also chairs the Interagency Committee for Youth Participation in Agriculture convened by the State Department of Youth. Felix serves as a non-executive director on the board of Citon PLC and Asset Prospect, a non-profit working to build resilience among communities in the eastern region of Kenya. Felix is an enthusiast of leadership and governance. He has been involved in championing legislative actions touching on freedom of expression, education, and youth. Felix is a co-founder of Imara Fellowship, a one-year policy-focused leadership development program which is implemented by other partners, and is also a yearly alumni and a fellow of the Australian Leadership Program. Ladies and gentlemen, with the view of the panelists that we have today, we can say that we are honored to be having the discussion being led by experienced personnel in the industry in terms of access to finance for the agribusiness value chain. And today, with a focus on the youth, we have the right people to lead the discussion. And as we project into the discussion, I will ask our panelists to introduce themselves. And I will start with Felix. Maybe can just introduce himself, and then we project on to Judith and Esther, and then we dive into the discussion. Karibu sana Felix.
Thank you, Mercy, and please do receive our appreciation to IIA for the amazing work that you're doing. I think you've already done justice, if not even a little more, to in terms of introducing me, and I look forward to participating in this discussion as we roll on. Otherwise, thank you.
Yeah, thank you, Mercy. Thank you for the introduction. Having given that profile, I think I just want to greet everybody and welcome everybody to the discussion. I look forward to a really fruitful discussion. Thank you.
To start with, I'd like to engage Judith, who is an agricultural value chain, and I want Judith to talk to us about the context of financing and investment along the agricultural value chain. What is happening around that chain, Judith?
Okay, thank you, Mercy. I would like to say that we have come a long way in terms of financing agriculture, both from the public and the private sector. Currently, I would like to say that we have seen increased interest coming from the private sector in terms of investment in agriculture. And we have also seen the public sector coming in strongly and also looking at agriculture really as a key pillar towards economic growth. All of us know that agriculture has always been in all the public documents as a pillar towards economic growth. However, we have not seen sufficient budgetary allocation towards the same. Even with the commitment of the government towards giving 10% of budgetary allocation to agriculture, which is actually a part of commitment from the Maputo Declaration, we have not seen that coming to fruit. We have seen recently it's at less than 4%. And also looking at agriculture being a devolved function, I can also say that then it gives weight to the county governments to plan, and it gives them the leeway to plan with this and prioritize it within their CIDP. So there is no much control in terms of what we can say that this is the allocation given to the each county in terms of agriculture, but it's left to the devolved units to work in their specified areas. In terms of what I would see, in my opinion, as the gaps so far, I would say that so far I've seen big gaps in terms of the whole market infrastructure, and there've been also a lot of concentration in terms of production and not looking at the other, with limited focus on the other sections of the value chain, looking at value addition, processing and marketing. So that has not been given a lot of allocation as we speak, or investments as we speak. But then I would say that fair enough, there is general understanding and acknowledgement that this is agriculture is the sector that we need to turn livelihoods around, to create employment even for the youth, and just make it work for everybody. And this you can also find in the public documents that are easily accessible. We see in the Vision 2030, agriculture has been identified in the Big Four agenda. Agriculture has been identified, so we cannot hide ourselves and feel comfortable that agriculture has not been acknowledged. It has been. The only thing that we need to do is now to, as Swahili would say, kusema na kutenda. acknowledge it and give it a sufficient budgetary allocation. Thank you.
Okay, thank you, Judith. In terms of, as you mentioned, looking at budget allocation and the value chain. Within this value chain, because agriculture is quite diverse, we have from the farm to the fork level. Within this chain, where do you think we have the gaps the most, and how can this financial institution, both public, private, contribute towards it? And also, another question on that line is, why do you think we have these gaps in these specific areas, the areas that have the highest need for financial and investment, but despite the increasement in budget allocation for agriculture, without the fund that comes in to support agriculture value chain, why is it that do we have these gaps? And also, why is it that as a youth who are in this value chain, where do you see the struggle for them?
Okay, that's quite loaded. Probably you may want to track and ask a question that I could not have addressed. But then I think you have asked 3 questions. I would like to highlight the fact that agriculture, first and foremost, has always been viewed, people have had negative perceptions toward agriculture generally, and this we cannot put the burden on the youth. We put the burden on the parents, teachers, and guardians, and leadership, as it were, because we are the ones who programmed the youth to view agriculture as a dirty job, let me call it that for lack of a better word, a job for the poor and a job for those who have not made it in terms of formal education. So that then has made it a bit difficult for the youth to delve in and come in very strongly, despite the fact that they are the ones who are supposed to bring in the energy towards making the agricultural value chains work. And so, as I said, that the older generation is the one that is to take the blame. I would like to say that the gaps I see in the value chains in terms of financing, one is there is more effort towards production, and with that, then there's a limited effort towards value addition, processing, and even marketing in itself. So we get to the point of having too much production, and then we have then too much supply, and then the prices go down, and so this discourages the youth. Another thing I would like to emphasize is that agriculture is a very risky venture. It's not just for every Tom, Dick, and Harry. I happen to be a member of some particular platform, and a member yesterday was complaining about by the time they were planting, there was a market for watermelons, and this member was in Moranga. And right now, then there it was 25 shillings a kilo, and right now when she's ready to sell, and she's a youth, she's ready to sell. None of the people who had committed to pay 25 shillings a kilo is available. But then right now she's hawking the watermelons at 8 shillings a kilo in Githurai market and Marikiti. So I'm saying it's risky, and so therefore insurance is very important, though it is not very well developed. So with that, then it makes contract farming to be very tricky for the youth, and therefore limiting their involvements. And another gap that I also see is that in terms of financing, do the financiers understand all these dynamics within agriculture? As I said, it's risky, it's highly vulnerable to external shocks. There are issues of climate change. And with that, then can the products, credit products to finance agriculture, can they be modeled towards this kind of an understanding? So for me, that's what I would like to address as gaps. And if we have financial service providers who would understand this, then they would come up with the appropriate products that would address these needs. And with that, then the cost of credit would be even affordable for the youth. And as I had highlighted earlier, the issue about contract farming, then that also brings in what I would call security, and would even make then the youth to move in and invest in agriculture. As I had said about the negative attitude towards agriculture, I would also want to say that along the value chain, there are specific niche that is that the youth can tap in, and if the emphasis has been on production and the elderly farmer, actually the average age of a Kenyan farmer is they say 60. The other day I heard is 65. So if that farmer that we have in mind focuses on production, the youth can choose to then have the different other sections of the value chain to address. For example, processing, value addition, and marketing. And I'm not talking about really transforming the product, like changing the entire form, but I'm talking about, for example, just aggregation. I've seen youth and youth groups that have done very well in terms of produce aggregation and securing better prices, and leaving the farmer happy and the youth happy. So what the market wants is to get produce in bulk, a good rate, and at the appropriate time. If this is availed, and the youth can do that, they have the energy, they have the technology. So within a short time, they can post on social media and say what kind of produce they have, and they can link up with markets very fast. They can do that. So I'm just using that as an example. Another thing I would like to say that in response to the question that you asked me, is that if the youth are able to see value of agriculture in terms of money, monetary value, they will be able to come in. And as I said, they have the technology, so they are innovative. And when they see the money in it, then they will transform the drudgery nature of agricultural work to make it more easier, and they would get the money. However, another big challenge towards the same is finance, that the youth have limited access to the key factors of production. We are talking about they have limited access to land, as I said earlier. The older population are still on the land, and if there is a place that the youth have land, then most of the times we find that the land has been subdivided into non-commercial productive units. So that makes it a bit also of a challenge amongst the youth. They also lack, I would say, the technology and the skills to delve into the production, and a key I would be, since we are talking about financing, I would be looking at entrepreneurial skills. And so those are the gaps, and if they are addressed, that would really support. In terms of the policy, regulations, and the institutional framework, I would say we have come from far, and right now I would say that there is a good provision. The environment is a bit is conducive for the youth. We even have the agribusiness youth strategy for the youth. As I talked about earlier, the Big Four, agriculture is part of the agenda. And so I would say that is sufficient, and the youth are able to move to the next level. Yeah.
Okay. Thank you, Judith, for your insightful contribution and discussion. I would like to welcome back my colleague Dennis, who will pick up the conversation with engagement with Felix. Thank you.
Yeah, thank you so much, Mercy, for standing in. Apologies, had a technical challenge. My power went off. So thank you so much, Judith, for giving that context, a deep dive to give us an understanding on what is happening in the sector in terms of financing. And more importantly, she has also touched on other factors which might affect the aspect of financing, both from a supportive point of view and also other challenges that are there. So thank you for that. Right now, I want to bring in Felix. Felix is from the Agricultural Finance Corporation, which is, as we know it, the loan government development finance institution with the mandate to distribute loans, offer institutional support, and also extension services. So I'll just want to go direct and speak to, I'm getting some feedback. I just wanted to put it across to Felix based on the context that Judith has shared with us about how the landscape looks like from an agricultural point of view. So I thought it would just be, first of all, to just introduce to the participants of this conversation today what Agricultural Finance Corporation is all about, what do they do, and how do they go about it. So just to understand what you do and how are you participating in the agricultural value chain financing. Welcome, Felix.
Thank you, Dennis, for the question, and thank you for having us here. So, like you've rightly said, Agricultural Finance Corporation is a wholly owned Government of Kenya DFI. We have a statutory mandate to provide agricultural credit and also offer technical support to the beneficiaries of our financing. We execute this mandate primarily through our presence across the country. So we have about 47 branches covering about 34 counties with a strategic intention to expand to cover the other counties that we do not have an actual presence today. For example, last month we were in, rather early this month actually, we were breaking ground in Marsabit County as part of fostering financial inclusion and bringing on board underserved segments. So we have essentially prospective clients walk to our branches, they express an interest, there is an interfacing with our officers and a pre-appraisal, and if the conversation escalates, we go through the established processes of financing. So that is essentially how we deliver our mandate. We have a modest market share, even though we are the is essentially the only government agency that is supposed to provide direct credit to the sector. Our market share is very modest, and that in part reflects what Ms. Libaisi was saying, that public sector investments into the agri space has not been very high, as it were. In terms of how we participate in financing agricultural value chain, so AFC deploys its investments across, both the length and the breadth of agricultural value chain. So we put money from production across value addition. We also finance midstream actors around, people who provide aggregation services, as long as, and including investments that are incidental to agric. So not necessarily just agriculture, but if for example, you provide, technically, for example, if you have a garage which services tractors, because that is an investment that is incidental to agriculture, then AFC is supposed to be able to support you. We have a strategic plan running up to 2023, and in our new strategic direction, we are trying to play a central role in ensuring that we facilitate both the implementation of the agriculture sector strategy as a whole, but because we are talking about youth, there is the youth agribusiness strategy that Ms. Libaisi again gave reference to, and then we also have the Kenya National Youth Policy, which has quite a bit of focus on agriculture. So what are we currently focusing on in this new strategic period? Primarily, we want to use AFC's investments to catalyze additional investments, especially from the private sector players into the sector. So we are focusing on models that deploy investments through microfinance institutions, for example, through cooperative societies. We are also running a number of risk share instruments, which are primarily structured to facilitate private sector, the flow of private sector capital into agriculture. We are also focusing on financial inclusion as a strategic pillar, and here we have investments around that are focusing on young people. We also have a women affirmative access window, because these underserved segments, through research, we have established, certain things that have been excluding them, and as such structured very targeted interventions. There are a number of things that I also hope to just bring on board. As Madam Libaisi rightly said, the sector has had a lot of challenges, especially looking at it from the public sector lens. However, there is a lot of promise as things evolve. With the rollout of the agriculture sector development strategy, we have a number of very exciting developments that players need to be very active, that players need to actually look at. We now have a warehouse receipting council, for example, fully operationalized, and we are, as AFC, going to leverage that so that we are able to deploy our investments into agricultural value chains through the warehouse receipting council. We also have the operationalization of a commodity exchange market that is coming up very, very well, and so players also need to be very aware of these developments, because these are going to change radically how we address the risks in the sector, and hopefully I am very optimistic that we are going to see additional investments from the public sector. We are going to see additional investments from the private sector, because yes, there are risks that are inherent in the sector, but these are risks that can be mitigated, and there are a lot of jurisdictions across the world that offer us a lot of lessons which we can borrow from and contextualize and really support the sector that we all agree remains the backbone of our economy. Thank you, Dennis.
Thank you so much, Felix. You've touched on a very important aspect and given us a good background of how the public sector is working with the private sector. Felix, in your presentation, you gave a very good background of AFC and also touched on some of the imperatives that Libesi had mentioned earlier. But this forum is more about looking at how to address the financing gaps that are there, but also provide real linkages, because some of the people here in this forum today are just thinking of what, after all what Felix has shared in terms of what AFC is doing, where exactly and how am I getting this money? We'll just be very straightforward about it. And perhaps I could borrow some weeks ago, Agra just released a report in terms of financing the agricultural value chain. And one of the questions that came from their report was that the issue is not just about financing, but what farmers really want to hear is how actually do they access? So how do we address the issue of accessibility? Is all these initiatives are there, the strategies are there, the policies are there, but why are people not getting money to finance their ventures? Will you put that to light and just tell us what AFC is doing to bridge that gap?
Thank you, Dennis. So a number of things that I'm going to speak to, and I'm not even just going to look at it as from AFC alone. So let me look at it. Let me okay. All right. So sorry about that, Dennis. There was a slight interruption from my side. So I'm not going to look at it in trying to respond to your question and just limit it to AFC, because as we try to move into the new strategic position, what we have tried to do is to link to a lot of other people who are putting their money into the sector. And there are certain gaps that we are noticing, which do not just apply to AFC, but to all other players, which I'd like to speak to. And one of the biggest challenge in the sector is organizing. And organizing in the sense that what makes real estate, for example, an attractive venture for commercial players is you can track the numbers. You can see the numbers from A to Z. You can see the costings are very clear, and the investment is certain. In the agriculture sector, a lot of our farmers either undertake these enterprises in their own name, and as such are informal. They're not formalized. They're not registered names. They do not have. You can only make investment decisions through anecdotal information that you're given. This hampers the ability of financial institutions to do credit scoring, but it also hampers even development partners who want to deploy philanthropic funding into agri-enterprises. They are unable to really give money because we cannot fully track how your enterprise is performing, what its impact is going to be. Now, the process of organizing an agri-enterprise has to be long, and it has to be patient, like growing any other business. And this is where we have to tell our young people that you have to start somewhere and then develop the business slowly keep the records, establish a financial history, and then leverage that to access finance. A lot of the frustrations in the sector, Dennis, is because I walk in today, I have an agribusiness idea, I walk in today, and an officer at AFC asks you a number of questions, and then you feel that you're being frustrated. The truth, however, is that even though it is slightly more difficult to access finance in agri, even if you were to walk into any other bank and to seek a loan for a car, you're going to be asked some questions. And so we shouldn't feel that this then is sort of frustrating or something like that. So we need to, as players in this sector, we need to move a lot of our farmers into a lot of our, especially at the production level, we need to support a lot of them to become organized, where someone can register a business well and good. If they are way smallholders, we need to move them into organized common interest groups like cooperative societies and whatnot. When it comes to providing real linkages, so I will have to admit that as AFC, we cannot even meet the demand. Our annual deployment is outstripped in excess of 10 billion shillings annually. So in terms of applications and requests that come, which we cannot meet as an agency. And if you look across the whole country where, if you aggregate what the public sector players do and what commercial banks do, you find that the total credit to the sector is just about 3 or 4% in its entirety. So we have a long way. We have a long way to go before we will be able to meet the full demand of the sector. However, there are a lot of interventions, and now I want to speak to. I want us to become a little bit more practical in terms of providing real linkages. There are a lot of players that are deploying investments into the sector, which we can, those of us who are here and even other farmers can start, and even other players rather, not just farmers, but players along the entire value chains can start taking advantage of this. We have development partners, and essentially, and these monies are coming in through programmatic interventions funded say by USAID or funded by the European Union, and we need to start looking out for those funds. Why this is important is because these development funds can play a very catalytic role in the very nascent stages of agribusiness ideas. Because their risk appetite is slightly high. They're not looking at, they're not looking at collateral or whatnot. So if you just package your business proposal really well, you are able to access some funding. This is, so for those young people who are out here who have groundbreaking innovations and they are frustrated, like this idea cannot be funded by a bank, please always be on the lookout. The sector is revolving a lot of funding. We are seeing grants in excess of up to including $1 million if your idea is viable. And that development capital can be very good at the nascent stages. And then as you move along, once you've developed some history, you can then leverage that to access debt or equity capital. And again, in terms of equity investments into the sector, very minimal. What we are observing, very few people are willing to put in equity investments, except up the value chains in terms of agro processing and whatnot. There we have quite good appetite, and there are private players who are deploying their investments. But once you have something moving, we are seeing some comfortable level of banks and other financial institutions like DFIs like ourselves willing to look at ideas that have some history and funding them. For example, at AFC, we've just closed a call on Enable Youth, which is a project that is being implemented in conjunction with the Ministry of Agriculture. And the government has given us up to about 2.2 billion shillings to support about 2,000 or so youth-owned agri-enterprises over the next 2 or 3 years. To augment that, I currently chair an interagency committee on youth participation in agriculture, and the committee's mandate is to see how in the next 3 years we can inject an additional public sector resources targeting specifically youth participation from production mapped deeply across the entire value chain mapped. So we will have niche points where young people can participate in providing, say, business advisory services. Madam Libaisi had mentioned that agriculture seems less attractive when we focus on production. But above, as you move along the value chain, there are people who provide advisory services. There are people who provide aggregation. There are people who provide agro processing. There are people who provide trade in terms of now actually selling the produce itself. And we believe that all these are opportunities which we can map and allow young people to participate in. So to answer your question briefly, Dennis, is to say, do we have challenges of access? Yes. But do we also have real opportunities to access these investments? Yes, those opportunities do exist.
Wonderful, wonderful. Thank you so much, Felix. That's a very good perspective. I like the fact that you have addressed the issue of the different finance opportunities for financing. You've talked about the debt, you've talked about the grants that are available from other entities, and you've also mentioned the issue of the equity funds that are available. And I just wanted to point back to Libaisi and maybe ask one question because of her experience in the value chain, and she must have interacted with a lot of farmers. Libaisi, do farmers really have knowledge of the available financing instruments and the requirements?
Thank you, Dennis. I would like to say that not all farmers have information of the available opportunities. And also, I would like to mention that farmers are not a homogeneous group. Farmers are at different levels. And so even the financiers need also to understand that farmers are not homogeneous. So when they come up with the financing options, they also need to customize the options so that they can really get target the right clientele and make their products and services attractive to such clientele. Yeah, so not all farmers are aware of this information. And based on my experience, I would like to also clarify that what I've seen is that most of the times the farmers who have information tend to have the information within their localities, and every other time a particular agency is coming into that particular area, they tend to be working with same farmers. So within a locality, you would find maybe a group that has been overburdened by agencies coming to see this one group working with this group. And so also as agencies and financiers also need to rethink our approaches and targeting towards the farmers. Yeah.
Thank you. Thank you very much, Libaisi. I think you've mentioned something very, very important in terms of customizing the products that are available, but also using this understanding to be able to target the various farmers with information about the available opportunities. Thank you. Welcome, Esther. Just to help you catch up with us, we have on board Judith Libaisi, who is an agricultural value chain expert in this conversation. And we also have Felix Lon, who is from the Agricultural Finance Corporation, basically telling us how the financing is happening along the agricultural value chain from a public sector perspective. And it's good to have you on board from Equity, and Equity is a non-bank in Kenya. And more particularly to inform this conversation, Equity has been actively financing SMEs around food and agriculture. And I would just like to invite you, Esther, to just take the airwaves right now, basically to tell us what is Equity doing in terms of addressing the financing gaps, what products do you have, and how do you do it the Equity way?
Well, maybe just briefly, and my apologies that I was in another call, and therefore I was not able to benefit from the earlier conversations. But just to say that the way we look at agriculture, by the way, we call it food and agriculture because we talk about from farm to the fork. So that we look at who are the players in between the journey and what are their finances. So why we it is because our business model is also very inclusive. We have farmers, and in fact, the original customers of the bank were farmers, and for that reason, we are unable to disengage. We have to carry them along wherever we go, even when we expand outside the Kenya boundaries. We still, wherever we go, we try to accommodate the farming communities and the players within the agriculture value chain. So it's not just about the farmers, it's also including the other players. And it's because of that we are able to finance and to look at them like a business, like any other business. Because if you look at the farmer alone, it can look very tricky. But when you now look at the farmer and the players who work with the farmer, for example, if it is a farmer who is doing maize, he will require fertilizer, seeds. Those are things that are not for the farmer. They are required by the farmer before he gets to the farming activity. And then looking at beyond the production, then what happens? Or even during the production, does he have water? Does he have, and we say crops don't grow because of rain, they grow because of water. So do they have source of water? Not necessarily because of rainfall, because with the climate change, rainfall is very unpredictable. So those are the things that we look at, and then finally we are able to finance players within the agriculture value chain. And that's where there are SMEs, because the SMEs could be suppliers or manufacturers of farm inputs. They could be providers of services. They could also be buyers of final products. So we look at each one of them and seek to understand what are their needs and their gaps. And then now the financing product is addressing those gaps. I think in summary, that's what I would want to say, so that I also don't take a lot of time. I hope I communicate.
You have communicated, Esther. One of the questions we've been getting, even when we were preparing for this forum, was that there is the issue of collateral. And this is something that has been pushing away, especially the youth. And Felix has done justice to the topic in terms of addressing the compliance gaps where some of the enterprises are not having proper documentation and all that. But there's an aspect of collateral when these farmers come to the bank and they want money. And I'm sure I've come across a product from Equity Bank called the Kilimo Biashara Loan, which targets farmers. So could you maybe just tell us more how this Kilimo Biashara Loan works, and mostly address how are you going about the aspect of collateral in terms of accessing financing?
Okay. Kilimo Biashara is a partnership product that we developed many years ago, I think around 2008. And it was we were working with AGRA. I think most of the players here will know AGRA is Alliance for Green Revolution in Africa. And at that time, we were also working with IFAD through a project that they were running with the Kenya government. And the question we were asking ourselves at that time was, there was a lot of hike of prices, food products. They were very expensive at that time. In fact, that there were some countries where there were chaos because of food prices. And it's because of that problem. It's like the way we are saying today we have COVID. That time, it was a challenge of food prices. And then we are seeing the people who could not afford food are the producers, the smallholder farmers. When there is hunger, they are the ones who suffer most, because most of the time they are relying on very traditional methods. They are not able to get good quality seeds. Sometimes they harvest seeds and plant the same seed the following season. So because of all those challenges, we asked ourselves, where do we start? And the agreement was that we start with the quality inputs and certified seeds, and that became our entry point. And that is why we called Kilimo Biashara, because we said there are farmers who are already doing farming, but they were doing it as a way of life. So we were trying to introduce commercialization, looking at farming as an enterprise and not like a way of life. So that was our mission, was just to see how we can do this. And instead of looking at it like a project, we developed a product. And that product, we are selling it up to today. I think for us, the lessons we learned very, very good lessons as we went along the whole process. And we realized we first of all needed to build our own capacity. And that became a very big part of our, I can say, a big cost for us, because we needed to get staff who really understand the farmers from a farming perspective. So we started even employing staff who are trained in agriculture. They go to universities where they study agriculture. And when they come on board, we train them now on the other management and banking issues, because those are much easier to train. But for somebody to understand what are the needs of a cow or a farm, or an enterprise at the farm level, you need to have gone to the School of Agriculture. So for us, that was a learning. We didn't know how to go about that. So it helps us also to develop our own capacity. From then, all the stuff that they require to have a basic knowledge in agriculture, then they come in and then we take them through the other training. So I can say the sustainability was because we didn't treat that as a partnership project. We removed the word project and we put the word product. And I think it made all the difference, because as we develop, as we continue to work with other players, we continue to learn different lessons. And we have also seen the farmers we started with at that time, some of them have progressed to be actually SMEs. We started with them, they were struggling. Some of them were even being fed by World Food Program. But with the time, because they are entrepreneurs, so they pick their enterprise principles, and they have been able to work with them, and we have seen a lot of them transform quite a lot, and they become very sustainable businesses. So, and then to incorporate youth, because I think you have also asked the question about youth, is also to seek to understand what are the interests of youth. And when we do research and try to find out what do youth want to do in agriculture, we find that they want projects which are not taking too long. They don't want to plant coffee and tea. They want something that can bring money, like horticulture, very quickly. So we try to address their needs depending on what we find as the gaps. And those who do it because of their passion to do it, they are very successful. And the issue of collateral is not the biggest thing for me. I think the biggest thing is the idea they have and how they want to take forward the ideas. And then the issue of collateral comes in as one of the requirements. But it's not a hindrance as such. I know, of course, the youth will not have traditional collaterals, but some of them have very convincing ideas, which you can look through and see how they have thought about it. And you start to see as a leader that your risk are already addressed. And therefore, you give them a chance. And most of them make it because they do it passionately from their hearts. And they succeed because it's something they are focused to do. But I'm not saying it's all of them, of course. There are some who will drop along the way if the money is not coming so quickly. So it's just a question of positioning yourself in a way that you're able to understand their needs and you're able to package your solutions to meet those needs. I think that's what I can say.
Yeah, thank you, Esther. And I think that has confirmed something Felix had mentioned earlier in terms of the availability of opportunities, and the agri-SMEs as well as the youth just asking themselves that question of how are they prepared for those opportunities. One of the questions that is coming directly is when someone wants to access financial support for their agri ventures from Equity Bank, what do they need, or how do they need to go about it? That's a question that is already coming up. Could you maybe shed some light on that, just on a high level, though this I know will be addressed on case by case basis, but generally, what is the understanding, what is the philosophy around that?
I think one of the things is about, like I said, having a good idea, an idea which is, I say, convincing, and we try to avoid situations where, like, some of the borrowers will come with a very good business plan, very well articulated, and sometimes it's not the person who has come up with those ideas. We see some of them, like, they go and hire services of professional people who know how to write proposals, business plans, so they'll come with a very good business plan. But when you start interrogating and asking, so how do you want to move from here to there? How do you want to where do you see yourself? When you start interviewing them, you start seeing that this is not your idea. This is somebody who has told you what to do. So that one automatically becomes like, since you don't know what you want to do, we cannot trust you with the money. But if we are able to interrogate and see, okay, what you want to do, this is the path you want to pass, and this is where you want to go, then it becomes much easier. So I think the first thing is the idea, and thinking through the process. Like, hey, I want to produce, maybe I want to buy a heifer, and maybe in a few months it will have capped. This is in dairy, and then from there you'll be able to sell milk, and you have insured that cow. So when we are packaging the loan for you, we are packaging including insurance. We are packaging maybe with the fodder that the animal will require. So that's why I'm saying it's how the idea is packaged, and being able to answer the questions throughout the process, so that we are clear that we know what we are doing, and we are not exposing ourselves too much. Because of course we are regulated organizations, so the money we lend is not our money. It's money that belongs to other people. So our regulators will really require us to be sure that the money we lend out there will also be able to come back. I think that's what I can say in terms of
Thank you.
We go about it. Yes.
Yeah, thank you so much. So, ladies and gentlemen, you've heard it very clearly right now that there are opportunities for this financing, and Esther has mentioned something very important about the aspect of inclusivity. First, from a point of looking at different groups along the value chain who require financing, they're inclusive, but more importantly, looking at other players who may not be involved directly on the actual production, but somehow they impact the activities of the value chain. There are questions that are already coming, and I'll just ask you, if you have a question, just post it on the chat box. But there are other questions that have already come, and maybe this I will direct it to Felix. And the question is about how AFC is addressing the challenges that are. How is IFC addressing the issue of collateral? Because this is still an issue, and I think this is more like closer to the answer that has just been given to us by Esther. So maybe you will address that, and maybe link to that also is the issue of where are the opportunities most in terms of or the needs of farmers, and maybe later Libaisi will also add a voice to this in terms of is it at the production, is it at the harvest, is it at the input phase? Where are we receiving a lot of interest for financing, and where are also gaps? Or have we also customized our products? That's where we're just looking at from production to harvest to spoon, as Esther's used the example from farm to fork. Are our products also in that sense? So maybe Felix, you could shed some light on that.
Thank you for the two questions, Dennis. In terms of how AFC is addressing issues around collateral. So yes, collateral has been a substantive hindrance when it comes to access to finance, both in agri and even in sectors outside agri. And for you to understand this, you'd have to appreciate that the go-to form of collateral that was largely adopted traditionally was land, and land has its own challenges because there are areas that have not been titled. For example, there is such a huge imbalance in terms of ownership, and there are a lot of gender issues here. You'll find a lot of titles leaning towards men, young people essentially missing out on them. So this has been a very big challenge. In terms of what we are doing to address some of these challenges, there are a number of things. The first thing is, in terms of addressing the gap in access by women, the corporation did an access to agri-finance survey in collaboration with UN Women last year. So we designed some data-driven approaches, and out of that there is a women affirmative access window, and through that access window we have adjusted the window to take into account some of the issues that we gathered through that survey. So that is one approach. The second approach is by policy we have now a huge array of alternative collateral that we are adopting, and including where value chains are tight, financing on the basis of market contracts. And I think this in part speaks to what Esther is saying, that how you package your concept and how tight it is, you could actually access financing without anybody asking you to pledge collateral. The other thing is what I had spoken to in terms of the developments that are coming up, and AFC as a public sector player has been at the heart of some of these conversations. With the introduction of the Warehousing Receipt Council, we will, once this is rolled out, I think the target is for the October crop this year, we will start seeing a situation where the receipt becomes proof of ownership, and then we can finance based on it. We've been doing something like that using some form of irrevocable orders with NCPB, but that arrangement was not as tight, and so it hemorrhaged quite a bit of our investments. But with the aligned warehouse receipting council, and then further the rolling out of the commodity exchange, these will start to become opportunities where, on the basis of the receipts that you hold, you can actually approach an institution and then you access credit. And then finally, there are a number of targeted interventions. So we have credit guarantee mechanisms. I mentioned that AFC runs a risk-sharing facility that enables us to adjust our risk scoring so that we are able to deploy our investments in places where we would not traditionally have been able to, and this is enabled through development partnerships who have put in some money and said, leverage this funding to be able to support women or youth in these segments or in these regions. And then finally now, AFC in itself has structured some partnerships with a number of players in the market where we are leveraging philanthropic funds to buy down risks. So we have arrangements with a number of players, for example, where when you approach us with an idea that requires 10 million shillings in financing, and yet the collateral that you're pledging can only cover maybe up to 5 million, we have a referral mechanism where we can direct you to some of our partners who will look at your idea. If it aligns with their objectives, then they can do a grant investment which considerably buys down the risk, and then we leverage that by deploying our credit funding. And then in terms of where we are getting interest for financing across the value chains, what we need to look to see to note, Dennis, is if we increase our productivity at the production level, then we have a lot more upon which we can add value, and as such we create a lot more opportunities across the value chains all the way to the fork, the way Libaisi characterized it. So to answer your question, I'll sort of rephrase it. Where would as a financier be much more interested to put their money? It is up the value chain, because there the risk is slightly lower. But in terms of where demand is, it is across all the nodes. The people who are doing agro-processing require capital. The people who are doing aggregation require funding. The people who downstream, in terms of seed propagators, in terms of agro dealers, all of those people require financing. When you come to production, there is still demand that has not been met in the sector. So in terms of where the demand is, it is essentially at every node you will find an ask for an additional money. I hope I've answered the question then. Thank you.
Yeah, perfectly. And there are still more questions coming up, and I think you've addressed some. Someone was asking in terms of what technical support does IFC provide. I think that has been touched on. Another question is, I have a problem with packaging the idea into theoretical proposal. Any help? Gigi, that help is available. We'll be sharing the contacts for Invest in Africa after this at the end. And that's some of the things we are doing under the SME Resilience and Recovery Program. Then Sarah Hinga asked, does AFC fund ideas or at least proof of concept? I think this has also been addressed partly also by Esther, and saying that the strength of the idea, and especially because the financiers look at it from a risk point of view, is it an idea that they can see an end to it, or they can only see where it is starting? So that's something that I think it's an answer, a yes and no answer, depending on what you put on the table. But we are open to discuss this and look at this further. And as I've told you earlier, we have a partnership with Equity Bank, and also we're also talking with Felix, and these are some of the things we can further take away from this forum. So that is possible. Then there's also another question from Kennedy Ambudo, and saying there's no reason why we should have employment. And I think he was just emphasizing the point Libaisi had made earlier in terms of agriculture having potential to provide employment opportunities. So I think he missed, there was a typo a bit in terms of unemployment. Then there was a question from Moses in terms of how is AFC working towards the role of county government in agricultural mechanization on youth. I think this has partly been addressed in terms of inclusivity and the various support mechanisms that are there. And I think, Felix, at a later stage, maybe we will bring you back to maybe just sensitize us on some of these initiatives that are running, like the warehouse receipt council and the commodity exchange, as well as the other risk sharing facilities that you are handling, which I think are challenging the current existing models of supporting AFC. But there's one particular question from Rosemary, who is an SME in agri processing. And she's asking a question that as an SME, you've already put in your money, you've built your idea, and now you're producing, but now you are at the point of value addition. So she's addressed this question directly to AFC and asking, can AFC fund such a business which already has packaged its project costs, and now perhaps want now to put maybe a plant, or want now to bring the aspect of value addition along its production line to fruition. So can you fund such a thing? I think that will be an answer that Felix, you will respond to. Then Ivy has just asked if the panelists can be able to make comment on the startup bill in relation to today's discussion. And I think, Libaisi, maybe you could mention that there was this bill that was put forward by Senator Johnson Sakaja, which is looking at how to have in place a framework to guide startups. Maybe you could mention this. And maybe Ivy, at a later stage, we will be having a forum maybe to discuss that and seeing how, if is it inclusive or is it only biased to those people who have technology innovations and all that. So Libaisi will respond to that question of the startup bill in relation to the conversation we are having. Then Felix, you'll respond to the question of financing in terms of an agro processing plant in view. Yeah. Then yeah, I think those two questions. I think the other question Rosemary is asking about, maybe Felix, just to add to the earlier question, is to ask if you within your partnership also you could link SMEs who are looking for joint venture partnerships or private equity, and because you had mentioned that earlier. So I think that's a very relevant question that you could address. So welcome, Libaisi.
Yeah, thank you very much. The question is from Ivy. Yeah, thank you, Ivy. I think, in my opinion, I would say that I am excited about the Startup Bill 2020. And what I see is that it is going to help in providing a framework for and giving space towards innovative entrepreneurship, such that the ideas and the concepts that time and again we have not been able to prove, and we have not been able to sell, so that we get investors, can be incubated, and so we can have proof of concepts, and from there it will be possible to always have a profile and a history where we can always have a stepping stone to move to the next level. So what I see is that there will be need to think through in terms of including agriculture and the value chain processes into, and putting it into perspective, so that we are able to ensure that we are on top of the game in terms of this bill. And so for me, I would say it is our time, especially the youth, to delve into this and run up with the matter, and to be able to work on it immediately it is rolled out. So that is what I would make as a comment. But it will be also important to know that it will help, especially in areas where we have been talking about people running with the ideas of youth and are not acknowledging them fully in terms of intellectual property rights. It will be a plus in that matter. And then looking at the issue of how would the bill support economic growth. I would say if this then comes into law, then it will really make the counties, or rather the rural areas, also to come to be profiled or to be known as centers of innovation, because then acknowledgement will still go back to the local levels. So for me, that's what I would look at it, and I would say it is a matter of the youth agripreneurs positioning themselves very well to be able to take advantage of the bill. Thank you.
Thank you very much. So Libesi has emphasized on the issues of participation, and she has confirmed that some of the issues being canvassed in that piece of legislation really touched on us, the issues of IP and the issues of innovation. So it's something that we should read and understand and also make a contribution to. Felix, maybe I could just invite you to just answer the two questions as we come to a close.
Yes, so to answer Rosemary, absolutely, this is something that we'll be willing to look at. So probably, Dennis, please feel free to pass my contacts to Rosemary. I'll try find out where she is best and where her enterprise is best, and then which would be the most ideal point to start the discussions. In terms of linkage to our partners, yes, if the enterprise aligns with the objectives that our partners are pursuing, we are more than happy to provide that linkage. Essentially, that is why we exist here. So, so please do feel free to reach out so that we have a better understanding of what the SME looks like and what support we can then be able to extend to you. I think those were my two questions, Dennis.
Yeah, thank you for that. Yeah, so thank you so much, the panelists, for doing justice to this topic. I know many questions will be coming up, and as we come to a close, I would just like to amplify some of the key highlights that come from this conversation today. And one of the things that we aim to come out to as a way forward for this conversation is to be able to first point those who are in the actual production and are involved in the agricultural value chain towards these opportunities, but also to initiate conversations with other people like IFC, initiate conversations with our partners like Equity Bank, so that you can be able to know that they are available to support you and you can have a direct link to be able to engage with them directly. So just mention that first, there's been a concurrence that there are opportunities and we need to be ready for them. And how are we making ourselves ready? That for any venture that you're involved in, think about compliance. We've also been challenged that when we are thinking around all these aspects of agricultural value chain financing, we should not look at it as a one parcel, but it has its own uniqueness, and we have to fit into that uniqueness and see what is our value along that. The more important thing also that I've picked today is that when you go to access financing, it will be approached on case by case basis. So there is no one fits all solution, because people have different interests and they're doing it anyway. But the financiers are ready to listen, but there are also more other financing opportunities beyond what we know, because we always know when you need money, you go to the bank, and we've been told there are other available financing, which is not the core as we know it. And with time, we'll also be having sensitization around this. And more importantly, it's good to know that the people who are giving you money, the financiers, they're always thinking in terms of risk. Good to also put yourself into that mindset. I'll just want to give one round of comment from our panelists, just to give us some parting shots that can take us to the next place. And then from there, we will bring this to a close and convene at a later date to take this conversation forward. So I will go with Esther being the first, just to give us some parting shot as we come to an end of this session. Then we'll go to Felix, then we'll close with Libaisi. So welcome, Esther.
Thank you very much for this opportunity. I'm glad to have had a chance to say something and also to listen to others, because this process is a learning process and nobody is an expert. We are all learning from experiences. Like now we are learning how to use technology during the time of COVID because it wasn't there. We have no past experience. So I think what we need to open is our mind so that we can learn a lot and use those learnings to package the solutions for the problems that are there in the market. And I would just want to say that, there used to be times when there never used to be finances for agriculture and the related value chains. But now the issue is not about availability. I think more is about how we package our requests so that we don't get turned down when we come to the bank. And we are also offering training. By the way, I needed to say that we offer interventions through like our Equity Group Foundation. There is a project we are doing called the Financial Access for SMEs and the Rural Population using technology. It is in 27 counties in this country. When we go out there, we struggle to see who need finances. But when we listen to conversation, everybody is saying we can't access finances because of that, this and that. So I really want to call the players who are there and their networks, come and talk to us and see how we can be able to provide solutions for the challenges in this space, because it's very promising. The future is big and sustainable, and there we just need to work together as partners and use technology so that we're able to move forward. Thank you so much, and I wish everybody a good time and a safe time during this time of COVID. Thanks.
Thank you, Esther. And those who are joining us from the coastal region, I think you attended the training we did with Equity Foundation last year around this time, so that is available to you too.
So let me first extend my, again, sincere appreciations to IIA for the good work you're doing. And then as a side note, I need to mention actually to Esther. Esther, I was once your kid up there at Equity Group Foundation, so it's really good to be able to hear from you. I think I have never heard from you since 2012 when I left Equity Group Foundation to go to college. So it's good to hear from my mentor here today. And then in terms of the substantive discussions that we've had, the sector looks very exciting. As an active participant on a daily basis, I think this holds a lot of promise for our country. And despite the frustrations that might have been there, we need to remain optimistic as many more actors come into play and support the organizing of the sector. I think there will be new opportunities, new frontiers being developed, and we need to be ready to take advantage of that. And then finally, to say we look forward to receiving feedback from you. This forum has been very instrumental to me in just seeing how people look at AFC and what questions you have out there. So we look forward to receiving more feedback so that we can adjust our offerings to respond to your desires as our primary audience. And thank you, and I wish everybody else a good afternoon today.
Thank you, Felix. Thank you for that strong, pragmatic voice, pushing us towards the opportunities. And I think it's the right momentum that we need. Thank you very much. Welcome, Libaisi.
Thank you, Dennis. Once again, thank you for the opportunity to share this information. My parting shot in terms of access to finance by focusing on the youth, I would say one, to the stakeholders and every other change agent and players in this sector is that, well, it's important to focus on the youth, but also know that it's not a homogeneous group. So it's important to have customized and tailor-made services and products for the youth. And then looking at the youth, to the youth, I would say there is no limitation anymore. People have been talking about constraints for the longest time, but now I think there is a conducive environment. And so to the youth, I would say it is the time to venture into commercialization of agriculture, and it's no longer the drudgery work, as it were, but looking at various value chain stages and the niche where they can invest and get income very fast. Esther had talked about high value crops, and that I would think it's quite a good selling product for the youth. And lastly, I would also like to say that agriculture is can also be digitalized. So it is a high time that the youth can also bring in the innovation and the energy towards digitalizing agriculture and making it fun and earning money from the same. Thank you very much.
Thank you so much, our eminent panelists, for allowing us to engage with you, creating time to be here to share with us your knowledge and experience. It's been a very, very useful and invaluable contribution to this discourse. And more importantly, it's also helped us as Invest in Africa to also look at other opportunities where we are able to collaborate and also co-create solutions towards addressing some of the challenges that face SME. So on behalf of Invest in Africa, I would like to say thank you and hearken to our call when we call you again. I also like to extend a word of thank you for everyone who availed time to be here today, to involve and engage themselves in this conversation as we try to find a solution. And Esther mentioned something very important, that as we learn, we also do, because nobody has solution. So as we continue to engage, we also find a solution. And I was really moved when Felix said that she was mentored by Esther, and I think that linkage has happened through this channel. And when we began initially, I was telling you the core of our work is driving those linkages and seeing how we can get value from those linkages. So I want to wish you a nice week for the remaining of the days, and also wish you blessings in your endeavors as we bring this to a close. So thank you very much. You can leave at your own discretion.